All right, day 45 of my journey to a $500,000 stock market portfolio. All right, let me go through what I have left in my margin account, and then I'm going to go through the positions that I've closed, so confirmed profits, and we'll do the same for the other accounts. All right, so once again, in my margin account, I still have my covered call on American Airlines, expires May 15. Box, covered call trade as well. Dell is a covered call trade that I'm doing well with, expires February 21st. DIA is a vertical put spread, expiring February 14. So this is a new put spread that I opened this week at a 282.5 short strike. Right now, the DIA is trading at 293.28. This is ridiculous. I've got another put spread on Facebook, February 14 at a 205 strike. Facebook right now is trading at 221.77, but there's earnings coming up at the end of January, so I have to be careful with that. It's already showing small profit. Got a Goldman Sachs. This was an earnings trade, February 14 expiry, so I went 30 days out, but the day of earnings, I went with a 230 short put. Collected 60 cents. I could have collected more. I think I did not place the right trade. I could have collected 80 cents easily, but right now I'm unable to close it. The plan was to close it as soon as earnings was released. I'm unable to close it even though Goldman Sachs is trading at 250 almost. Collected 60 cents. I could close it for about 35 cents. So obviously I want to close it for I want to close it for less than 30 cents, which is not possible, because my initial entry or the premium that I collected initially wasn't good enough. I've got a put spread on IWM, February 14. So as you can see, most of the put spreads are 30 days out. So February 14. So IWM, this one has a 162.5 strike. It's already showing a decent profit, but I don't think I'm going to close it yet. It's very close to 50%. I'm going to hold on to it for a bit. Maybe next week I'll close it. Most of these 30-day put spreads that I'm opening, I'm closing them in a week. But that's because the market is rallying. But if we have a normal market where sometimes it goes up, sometimes it goes down, or just stays steady, it might not be closed in a week. I've got MasterCard put spread as well. 297.5 is my short put. MasterCard is trading at 320. So I've got a lot of breathing room. And it's also showing me a good profit. Might be able to close it soon. Right now, it shows that I can close it for about 40 cents, but I only got 71 cents out of it. So it's not 50%, so I'll still have to hold on to it. So Netflix is moving in the right direction, but because of earnings, I'm unable to close these trades early. For example, I've got Netflix here, February 7th, 305 strike. See, earnings is January 21st. So 305 strike or short strike. Collected about $90 or 90 cents, but I'm not able to close it yet. It's still showing me, if I want to close it, I can close it for probably 80 cents. So it's not ready to be closed because I'm getting close to earnings. So premiums are going up in value. Same thing for this one, February 14. This one I just opened this week. I opened it January 15 and I collected, I believe 80 something cents. And yeah, obviously it's not going to be showing me anything. I've got two put spreads on the queue. So this one I'm trying to close for 50%. It's already 50%, but because it was only 65 cents or 64 cents, I'm trying to wait till it goes even lower so that the commissions don't eat up my profits, but it's already showing me a 50% profit. I can close it for about 28 cents already. This one's brand new, February 14, expiring February 14. So not ready to be closed. Of course, collected 65 cents on that one. So on the SPY, I've got 3 left. I've closed a few. So that's pretty good. I remember at some point I had 6 put spreads on the SPY. Could be stressful. All right, so I've got February 10, February 12, February 14. I've got 319 strike, 319 strike, and 320 strike. Right now, the SPY is trading at 331. Ridiculous. In fact, this one probably could be ready to be close. So 82 minus 22 is 60 cents. Yeah, it's very close to 50%. This one might be ready to be closed at 50% profit. I've got 2 put spreads on Tesla. So let's look at the February 7th one at a 420 strike. And I've got another one at February 14 at a 445 strike. Now today Tesla dropped in the 400s, giving me a little scare, but then it bounced back up like the Tesla it is. So because of earnings coming up, it's going to be hard to close these earlier. Maybe this one has a chance. This one right now, I collected about 90 cents. Yeah, it shows me about 70 cents that I can close it for, but not 50%. So I have to hold on to it. And then I've got my Uber covered call and United States Steel covered call, which expires January 17. So you see, I'm down on this stock. I bought it average price 18.29. Right now it's trading at 10.46, but every month I'm collecting premiums from the call options that I sell. So it's better than holding a stock that doesn't do anything. You're sort of collecting a dividend on the stock by selling call options. But you have to be careful with the strike that you choose, because the consequence of selling a call option is that you might lose your shares at that strike. So if you don't want to lose your shares, you need to make sure you choose a higher strike price. So in this case, I chose a 14 strike, but the stock never came close to it. So I could have actually chosen a 12 strike or even an 11 strike and collected a higher premium. But of course, I didn't know what was going to happen. I didn't know that United States Steel was going to drop. But yeah, I still collected 10 cents, and next week I'll most likely sell another call option on United States Steel. I'll wait for this one to expire worthless. I don't want to pay the commissions to close it out. All right, so let's look at the trades that I closed. So January 14. All right, so the earnings trade that I had open on Monday, I basically lost on all of them. Delta Airlines. It shows here the credit that I received. I received $1.39 from opening Delta Airlines Iron Butterfly, but I closed it for $1.68. So I lost a bit on that one. JP Morgan, I opened it for $2.24. I closed it for $2.16. So not even worth it. A very small profit. Doesn't even justify commissions. Citigroup, I opened it for $1.78. I closed it for $1.44. Not worth it. And Wells Fargo, opened it for $1.26. Closed it for $1.67. So overall, I lost $28 plus commissions. Brings it to around $90. So these were 4 terrible Iron Butterfly trades. One of the reasons is the expiration was January 17. So even if earnings went by, there was still value priced into the premiums because the expiration was still 4 days away. So even though most of these stocks were trading at exactly my short strike, I wasn't able to close them for that much of a profit. And who knows, if I had held on to it till Friday, maybe I would have made a better profit. For example, JP Morgan here, my short strike was 138. So if JP Morgan's trading at 138 or close to it, I'm going to be really disappointed. Yeah, this hurts. I could have closed it for a much better profit if I had just held on to it till Friday. So this is probably me not being patient. But at the same time, I don't know that it was going to trade at 138. On Tuesday, it was trading at 140 and going higher. So I basically closed it. Instead of making a loss of $75, I closed it earlier for a small profit. But yeah, if I had held on to it till Friday, would have made a much bigger profit. Let's look at Citigroup and Wells Fargo. So Citigroup, I had an 82.5 strike. So let's see what it's trading at. 81. So I could have probably closed it for about 1.5, $1.50. So Citigroup wasn't a big advantage. Let's look at Wells Fargo. I think my short strike was 52.5. Wells Fargo is trading at 49.25. Wells Fargo, my short strike was 52.5. So yeah, in this case, see, the only one that I would have been better off is JP Morgan if I held on to it till Friday. And Delta Airlines, I had a 60 short strike. Let's see what it's trading at. 6. Yeah, so I would have closed it for $2. So see, that's why I don't hold on to it till the end, because I don't know what's going to happen. It could get worse. So I just closed it for a smaller loss. Some of them were small profits, but all combined, they were a small loss of $28. So I closed my January 31st put spread on the Qs at a 205 strike, but I opened a new put spread February 14th. The January 31st one that I closed for, I think I closed it for about 15 cents and I had opened it for 60 cents. So that's definitely more than 50% profit. UNH was an earnings trade. I went with a put spread at 270, but 30 days out, collected 80 cents. But then the next day, as you could see here, so opened the January 14, closed it January 15 for 37 cents. So 50% profit in one day. And that's because of earnings. The stock, the value in the premiums drop after earnings is announced. And obviously UNH went above the previous day's price, so that helped me close the trade for a profit. So Netflix, January 24th, I closed this trade for 47 cents. Let's see what I opened it at. I remember probably around $1.95. That's usually what I can get with Netflix and Tesla. So January 24th, this one is the one I closed. This is the one I opened. So I opened it for 95 cents, closed it for 47 cents. So that's definitely 50%. But I actually opened it December 24th, closed it January 14th. So this one's actually 2 weeks, a little bit more than 2 weeks. This one is pretty long. Yeah, and today I closed 2 put spreads, one on DIA, one on the SPY. So let's look at this SPY February 7th. I've got too many SPYs to look at. So February 7th, yeah, I can't tell how much I opened it for because I opened it with something else. But I usually open it for around 60 cents. And you could see here that I closed it for 26 cents. And then DIA, February 7th, 280 strike, closes for 23 cents. And I had opened it for, yeah, I opened it with something else, so I can't tell right now. But once again, for sure, it's more than 50% profit in a matter of January 8th, closed it January 16th, so in 1 week. Pretty disappointed. Bombardier dropped today 36%. It was the only position I had in my RESP. So I actually bought this stock at $2.25, and right now it's trading at $1.22. But for sure, I'm going to continue selling call options against it, but quite disappointed. I had some chances to get out of the trade, but just continued holding on to it and selling call options against it. But then the stock dropped, and I have it in my RRSP as well. But here I bought it at $1.82, and right now it's trading at $1.22. So the balance in my RRSP increased by about 5,000 because I made a contribution to it. I'm definitely going to make a video on the importance of contributing to your RRSP because it is the season right now. But yeah, I contributed to my RRSP for to get an income tax credit. But now I've got some buying power in my RRSP, but obviously I don't know what to buy. Everything's at all-time highs. But the rest of my positions in my RRSP, they're all covered calls. So I've got Bombardier, L Brands, Novavax, Square, and Yeti. Square is actually doing well, 69.52. So it's past my short strike of 69, but I just keep selling call options against it. So I have no problem letting my shares go at 69 because it is my cost. And I've been selling call options on Square for a while now. See, this part here only shows 3 months, but I've had it more than 3 months. But just in the last 3 months, you can see I collected $1.25, $1.35, and $1.60 on Square. So I collected $420 in 3 months. So that represents a return of about 6% in 3 months, just from the call options. Obviously, there's no capital appreciation because at that time, Square was actually down maybe to $62 or even less. So it's not bad. But I actually collected more past these 3 months, which doesn't show on this interface here. Same thing with Yeti. I'm ready to let the shares go at 33, but I just keep selling call options at the same strikes because it is possible. And TFSA, same thing. I've got some buying power, but I don't know what to buy. I'm eyeing the Qs, but it just keeps going up. Right now it's at 222.47. I just keep missing out on it because I keep thinking that it will come back. I don't want to buy it at all-time highs. I mean, even if I think that the market goes up over time, this cannot be a straight. It has to come back down a little bit. It has to. But obviously, I don't know when it's going to come back down, and I have a hard time buying it at an all-time high. Look at this. All-time high. Doesn't make sense for me to buy it right now. Just drop a little bit and then I can buy it. But besides that, I've got Afria with a call option that expires tomorrow. Bed Bath & Beyond expires February 21st. CHK expires tomorrow. Grubhub expires February 21st, but this one's not good because my short strike is 50. The stock is at 56 and my cost is 74. So I risk losing my shares at 50 while my cost is 74. Halliburton expires February 14. IMGN and NEO, I had to roll them very far because that was the only way I could roll them for a credit because the stock went way past my short strike. So these ones are total losers. I'm just trying to recover as much premium as I can before I lose my shares. And Teva had to roll to an 11 strike because it went slightly past my 10.5 strike. I had a 10.5 strike expiring next week, and the stock went past it, so I rolled it over immediately to an 11 strike expiring February 21st for a credit, of course. Alright, so that was a quick overview of my portfolio. So if you have any questions, any comments, leave them in the comment section below. Like always, if you're going to open an account with Questrade, use my referral code in the description below the video to get up to $250 back. Thanks for watching.